Hey guys, welcome back. Let's have a look into the positions that we have. Today, I would like to give you some important learnings and also how to take the decisions in these low IVs and why we are taking that decisions. And in the end of the month, we will analyze because we are running in the low IVs and we need to make some changes. People who are seeing for the first time, you can go through the strategy videos that I put it in the description links, and we have calendars, ratio spread, expiry day, monthly, weekly error fly strategies over there. Coming back to the position, because we are running in the low IVs, and I would like to give you some important points in the double calendar that we have taken last week. Last week we have taken double calendar with the safe distance, right? It is having a distance more than 4 to the upside and around 3% to the downside. Okay, so after taking in the last week, market started moving slightly to the downside. So here I had taken some decisions. So like we do it for a monthly, weekly errand fly, I started taking some trades in the weekly also to increase the profit in this zone. So if the market spends expires in these ranges, okay, we will get some profit. If the market spends time here, we will not get much profit here. If the IVs goes high, we will get benefit. You can see here. If the IVs stay in the same range, will not get benefit in this range. So that is the reason I started selling weekly as the market started moving down. So from the C side, I started collecting premium. So I also do the hedge 1 is to 10. Okay, so you can go through the strategy videos to understand the logic, and people who are already following. So this is a new learning. I'm also experimenting with some trades. So to increase the profit in the meal, to boost the profit further, this is the decision I'm taking. And as the market kept moving down, I have taken five more lots. And the stop loss initially for this was 54. That means the 100% stop loss with these fillers. Now for this new introduced lots, this is 50% stop loss. That means once it reaches 45, I'll exit this. And based on P and L, will take the stop loss, decide the stop loss for this as 50% or 70% or 100%. So I'm not fixing the stop losses here. Based on your risk appetite, you can take it. So end of the month, we'll also analyze these trades. Okay, and even with these weekly positions, still we are having VGA positive, and with increase in IVs, our profit also goes. If you can see in the payoff graph here. So if I compare this monthly, weekly iron fly, where we don't take calendars, right? Hedges here we have taken for the next month, whereas in the monthly, weekly iron fly, same months, right? Basically, we take base iron fly in the monthly, and we start selling the weekly based on the market direction, right? So here, this was the base iron fly we had. 44,000 is the straddle, and market started moving down, and then I started selling the weekly positions from the C side, and of course we hedge it here. Hedges are 1 is to 10 ratio, right? As we already know. And once the market started moving further down, I added five more lots. We are doing very safely this time because of the low IVs. We are not selling 1 is to 2 ratio. We are adding 5 by 5, 1 is to 1 initially, and again we added 5 more lots. So here also the stop loss is 50% for this, somewhere around 47 is the stop loss. And initially we had a stop loss of 82 for this, 84. And now based on the PNL, we'll take the stop loss from 50% to 70% for this. Okay. I think when the stop loss hits, the market would have reached straddle positions or maybe little above straddle. So we start selling PE positions from there. I will also take some other important discretionary trades. If the market keeps spending time here, on the expiry days, we start selling from both the sides, right? So I will see how many lots we have to sell in this low IVs. So many of you already earning good in this trade. So I think you know how to deal with this weekly now. So if I am dealing with low number of lots to have a low risk, let's see how it goes. And other position is last months we have logged the profit, and this is a minimum profit we have from both the sides, and the maximum profit is 1 lakh 4,000, and 3 lakhs capital is locked for this, right? And the profit, if you see here, we are currently running at 73. So there is some decay in the last weekend. So it was somewhere around 65,000 or 66,000. For the 3 lakhs capital locked, this is a good, profit. And here the idea now is I'm going to bring these hedges a little closer so that the profit here increases and we need to give away some profit at the maximum side here. Let us see how much profit we can lock, because now the hedges will be available the cheaper price, less than 10 rupees we can easily buy now. So here, okay, still it is 14 rupees. I'm okay to buy. And to the top side, here we need to give 11 rupees. Okay, so we have another 4 days. Anyways, I'm fine to take with 11 or 14 rupees. I'm going to exit these two now at 37.6, and here 34.55. So now if you see, we have given away 3,000 to the market, and the 10,000 rupees is increased to both the sides. Now this is the minimum profit that we get. Let the market go anywhere, we get this profit at least, and we can stay until the end. If the market spends time here, we'll get into good profit. I'll keep you guys updated what decisions I take for these two trades especially, and I hope this is very good learning. Don't forget to like and subscribe. Thank you for watching, guys.